So I think we're live now.
I think so. Looks like
I
it.
think we're live on Facebook right now. Hello, everyone. This is Marvy Harris once again, the CEO Money Max Bookkeeping Services, where we specialize in helping mental health CEOs to make sound financial decisions and to cut taxes through financial planning and tax strategies. And today with me again, I have a wonderful person, my tax partner, and I will let him introduce himself. Go ahead and introduce yourself.
Yeah. So my name is JT Pels, as Moby said. I'm a CPA here in Des Moines, Iowa, right in the heart, well, not the heartland, but the middle of the country. So we service people in all states, all the way from Hawaii to New York, or I guess it'd be Maine, out in the Northeast. And we focus on proactive tax planning. So we're looking at your situation 2 to 4 years down the road, and we want to help you minimize all the tax deductions that you can, and especially the ones that you don't find on YouTube and Google.
Thank you so much, JT, for joining us and for that beautiful introduction. So it's right on time, and I'm going to start by saying, if you're joining us live on Facebook, please feel free to leave your comments down below. Share this, like, and tell other self-employed business owners that you know can benefit from this. Thank you. So JT, what is this one step that a self-employed business owner can take to help them save $10,000+ each year? That's huge. What is that one step?
So that one step is, again, I don't want to lose anybody here in the legalese or speaking over everybody's head. It's what's called entity selection. So that's really one easy, and we'll get into that in a second. But long story short, you get to choose the way you want to be taxed.
Thank you. So what is entity selection?
Yeah, good question. So entity selection, and this, again, this is only for self-employed people, is that when you strike it out on your own as a therapist and you're like, hey, I'm making money, I'm working for myself, this is great, the IRS automatically places you in the highest tax bracket possible. I know, unfair, right? Which generally for a lot of you guys, once you get that first tax bill, you're like, man, I feel like I'm paying almost half my salary in taxes. What the heck is going on? And that's because you most likely are. When you first start out as a self-employed person, the IRS puts you in that high bracket. So you're at about that 40 to 60% tax bracket, depending on your state and where you live. But with entity selection, you can tell the IRS, hey, IRS, I want to be taxed differently. I don't want to be taxed so high. I want to be taxed lower. So one way you can do that is through, you can do that anyway. You could pay 0% in income taxes if you want to, for instance, be a nonprofit organization. If you want to just pay a flat 21% tax rate, you could have what's called a C corporation, and that's a flat rate. So whether you earn $1 or $10 million, you just pay 21%. Or you can be the most popular, what's called an S corporation, where you don't pay that 15% taxes. So if you're making $100,000 in profit, which basically means everything you bring in less everything you pay out, so what's left over, and you cut off 15%, that's $15,000 right there. And most self-employed businesses don't know that, especially in the therapist space. You know, you're just starting your business, you're making money, and you're like, damn, I just got slapped in the face. So just by making that one easy step, you can cut $10,000 plus. And that's not even getting into the really fun stuff that we do. That's just one part of it.
That is awesome. And I've seen a lot, a lot of mental health providers, counselors, therapists who are solo owners or who are self-employed, even though they have employees, even they themselves don't know this hidden gem about entity selection. So that's a very cool thing to know. So how do I know what the best entity is for me as a mental health owner?
No, that is very good, because this is not a one size fits all. I'm not saying, hey guys, go out and be a C Corp. That's not what I'm saying. A lot of it really depends on your own internal fortitude. And what I mean by that is, obviously you get to pick what type of, how you want to be taxed, for lack of a better term. When you're an employee and you work for somebody, the IRS just says, okay, you made $100,000. Here's your tax rate, pay us. But when you're self-employed, it's more of kind of art form. Like I say, if you don't like the tax, change the facts. So, and that does not mean make stuff up. That's not what I'm talking about. But what there is, it really depends on your own internal fortitude. So if you want to become, for instance, an S corporation and save roughly 15% on the top, that does include a little bit more work. For instance, you have to incorporate, you have to fill out additional forms to the IRS. Your bookkeeping becomes a little more complex. You have an extra tax return. Same thing with the C Corp, that in order to get that benefit, it does require more work. So if you off the top know, I'm not doing this, then you don't do it. But the people that we work with, they're willing to put in that work. And I know you guys are too. So that's the main difference, is it really depends on how much work you want to do. Because everything in life, nothing in life is free.
That's right. I don't think if you are going to be making a $10,000 savings, or, a couple hours, maybe even less to put in the work should not be too hard, or is it?
No, exactly.
So, so this $10,000 savings we're talking about, is this just a one-time thing, or how does that work?
No, exactly. So this can be, so if you decide to change your entity, which is called an S Corp, we'll just use an S Corporation as an example, for this year, that goes on next year, the year after that, so forth, at least until Congress changes the laws, which I don't think they're going to get rid of this. I don't think they're going to get rid of the S Corp anytime soon. That's just me. So if you're, we don't want to do ageism here, but if anybody is, if you're a therapist, you're striking it out, you're 30 years old and you plan to work until you're 60, 65, that's 35 years of work experience. I mean, imagine saving $10,000 for the next 35 years. And that's just by changing the entity. That's not by talking about all the other cool things that we can do. There's over 200 S Corp strategies that I recommend for clients. And that's just one of them. That's just putting the Band-Aid over the tax wound. Then we're performing surgery.
That's awesome. That's so awesome. So it sounds like that is the first step to start getting all the, for example, we're looking at S Corp. That's the first step to start enjoying all the other cool benefits. But first of all, you need to do your entity selection, and then you enjoy this $10,000 savings every year. That's awesome. So can you show an example of how this can be done or achievable in real time?
Yeah. So again, we're not going to go over into all the steps here, but this is a real life example of a client of mine, and we did some scenarios. So Movi, if you can let me share the screen here.
Oh, absolutely.
Yeah. There we go. All right. So what most everybody here joining us, I would venture to say, is what we call a sole proprietor or a single member LLC. They get taxed the same, which is in the highest bracket. So again, this is a client of mine. We ran some different scenarios just to see what would happen with him. So this person was not going to say where they live or what they do, but they make money the same way as anybody else. So as you can see here, during the year, they made about $311,000. That's in profit after revenue minus expenses, which basically means all your money in versus all your money out. So at the end of the year, they made that. And we go down to this nice number here. They get slapped with a $100,000 tax bill. And
wow,
they did not like paying that. And again, they came to me new. They didn't have any strategies in place. They're just like, this is what somebody gave me. I think this is right. So we went with that. Now I told them, I said, if you elect an S corporation, which is your entity structure, it's just your tax structure. It doesn't change the way you operate. It doesn't change your articles of incorporation. It's literally just changing the way you're taxed. If you were to go to an S corporation, same amount of money here. It went down from 100,000 to 78. So he just saved 20K just like that.
That's huge.
And yeah, that's a down payment. That's a car.
Right.
What would anybody do with an extra $100,000 or
extra $20,000?
$20,000? I don't know, celebrate. You could invest it. You could reinvest it back into your business. So it really changes the habit of your life. And the nice thing for him is, he's in his early 30s. He's going to be doing this for the next 35 years. That's $600,000 in tax savings, at least.
Yeah.
I mean, that would change the direction of your life. And if we wanted to get really fancy and do what's called a C corporation, now this is a little bit different, a little bit more involved, but for the most part, he would have paid $65,000. So that's $35,000. Now I'm guessing everybody out there that's going to be watching this later or is watching us on live, you'd probably do a little bit of work, maybe an extra 10 hours of work a year for $35,000. Would you do that, Moby? If I said, hey, Moby, you have to work maybe 10 more hours a year, but I'm going to get you $35,000. Would you say yes?
That is making $3,500 an hour. Heck yeah.
Yeah, which I don't know about you. I
would do it.
Not that much. I don't charge that much.
Well, if I'm earning that much for 10 hours, just roughly 10 hours, that means I am earning $3,500 an hour.
Exactly.
That's a lot.
And again, I want to impress upon that. That's just from changing the way you're taxed.
That's right.
That's not including other stuff, and we'll go over it next week. Like, for instance, hiring your kids, how to make your travel deductible, how to write off your clothes, how to do all the, special retirements for business owners. And you get to, as a business owner too, you get to actually contribute more than the $6,000 or $6,600, I think, this year for your IRAs. There's so many different things that just changing your entity structure allows us to employ those 200 tax strategies. And again, we want to preface this. I don't know if I said it earlier. This is something you want to check with your accountant about. Don't take what I'm saying and say, I'm going to go and start an S Corp today. Talk to your accountant, because this is general advice. This is not pertaining to your situation. Because again, there might be a reason why maybe you don't want to be an S Corp. Maybe the 10 hours of work for $20,000 is not appealing to you. That's cool. Like, I'm not here to sit here to judge you. Some people don't want. I have clients that are like, I don't want to pay for the extra tax return. I just want to keep doing it the way. And
okay,
I
the way it is.
I can only lead a horse to water. I can't make him drink. But like we said, to change your entity is very easy. It's not that hard. It's just filling out some paperwork, and you can do that. And again, with my client, we'll call him Scott. It's not his name. He saved, anywhere between $20,000 to $35,000 just simply by changing his entity structure. And when you work for somebody and you have a normal 9-to-5 job, I don't know, unless there's some voodoo magic out there that I don't know about, that you pay what you pay. You put it into TurboTax and you spit it out. That's the beauty of being self-employed, is that you can start turning these everyday expenses into tax write-offs. For instance, my cell phone, I write that off because I use it in my business, or a portion of it. I get to write off my car. I get to write off, I have an office that I rent. This is my home office here. I get to write this off.
Yeah, you also get to rent your own house to yourself 14 days in a year,
Yep, the Augusta
work
rule.
from home. Yep.
It's another one. Yeah, you can rent it to yourself. That'll be another topic. But yeah, that's another wealth building strategy. And this is when you hear when you hear in the news, like Amazon didn't pay any taxes, this is part of how and this is one small step, but this is how they did it. They didn't do it by, they don't do it by, showing up to their accountant in April and saying, all right, I guarantee you, I don't know this, but I would bet my life on it, that Jeff Bezos and Amazon doesn't just show up to their accounting firm March 15th and said, hey guys, find me everything. No.
That's right.
Talking to his accountant right now. Or
you got a plan.
They're doing it now. And the nice thing is that even if you're just starting out, having a plan in place is great, because it could be as little as doing this. This is planning. Because what happens a lot of times is that most accountants, and I know this because I've come from this world, is that they're very reactionary. They come to you, you go to them once a year in February, and they give you a bill. And you're like, why am I paying 40%? There has to be something. And they're like, there is, but they've got to do 50 other returns that day. So they're just like, no, there's not, here, out the door. And you're like, what the hell? Like, I just got beaten with a sledgehammer. What happened? And then and again, it's not your accountant's fault. I'm not saying this to bash anybody.
Yeah, I was going to say that.
It's not their fault. It's not their fault. That's for another one, is the difference between tax prep and tax planning.
Planning.
Tax
Yep.
preparation is just taking the shoebox of your receipts that you give them, which is not a good idea. I don't recommend that because you're going to miss a ton of other deductions, but giving that, and the accountant does his best or her best to just be like, well, I think this is that. And they just put the numbers in and it gives them out a number. There's no strategy involved there. But when you take the time and you care about your finances, because as much as we know, taxes are your biggest expense. And if you want to take them serious, I invite you to book a call with us because we can go over into your specific situation. Again, this is just my client's situation. We're not sitting here saying you need to be an S Corp because there's all types of things that come with that. But if you're willing to put in the work, an extra 10 hours a year to save $20,000. I mean, like I said, I don't know where I get that ROI. I've never gotten that type of ROI. Have you, Moby?
No. No. So this is the way to go, if you want to make all of these savings. And I want to thank you so much, JT, for dropping this eye-opening, mind-blowing gems for us here today. But for those who are watching us live and will be watching later, if you would like to know what you can specifically do for yourself and your business, I am going to leave in the comment section somewhere in this post how you can schedule the time with me and JT, and we can go over your situation with you, and we can start, get the ball rolling to help you save. I'm all about saving and making my tribe money in any way that's legally possible. So don't miss out on this, and then we will see you the next time. Thank you so much for joining us. Thank you so much, JT.